Good morning, you're watching Market Cafe with me Shreyansi Singh and Snehi Shah on ET Now, and over the next hour, we'll take you through news and updates from within the country as well as across the globe. A very good morning to you, Snehi.
Good morning, Shreyansi, and let's start by looking at the global handover that's coming in, and well, not much is happening when it comes to Wall Street. Rather flat moves coming in last night, and stock futures were little changed in overnight trading on Tuesday, and stocks are coming off a rather mixed session on Wall Street and intraday trading yesterday. The S&P 500 lost almost 0.2%, while the Dow Jones dropped nearly 158 points, or almost 0.5%. The Nasdaq, however, managed to eke out a slight gain of less than 0.1% as well, so very nominal gain coming out for Nasdaq, but in the green nonetheless. Now, 7 of 11 major S&P sectors finished with losses, led to the downside by that 1.6% drop that we saw in the energy stocks yesterday in Wall Street. Now, markets remain in a wait-and-see mode as investors are ready for the unofficial start of earnings season, kicking off Friday with the big banks, and brace for two key inflation reports that could inform upcoming Fed Reserve rate decisions. And December's Consumer Price Index report comes on Thursday, followed by the Producer Price Index reading on Friday. Now, earnings will also heat up from Friday with results from major financial heavyweights including JP Morgan Chase, Bank of America, along with United Health Group and Delta Airlines. All of these will start trickling in from Friday. So, well, keep your eye out on all of that as well. So, that's the handover when it comes to the US markets. Let's also quickly take a look at what the European markets have done. You've got DAX that is trading with a downtick of 0.2%, FTSE also down 0.1%, CAC 40 also down 0.3%, Stock 600, which is the pan-European index, also down 0.2%. So, well, all I'm seeing, Shreyansi, on the screen is red when it comes to the European markets. But also what's key to note is yesterday we did mark the sudden rise that we saw in cryptocurrencies, and today also let's take a look what's happening with cryptocurrencies, and it turns out that whole action has reversed. Cryptocurrency exchanges Coinbase and Marathon Digital fell 1% and nearly 3% each as Bitcoin prices declined. Now, the price movement came on the back of an incorrect announcement posted to the US Securities and Exchange Commission's X, which is Twitter's former new name, Twitter's account, saying that it had approved Bitcoin ETFs. Now, the SEC later deleted the post and said that its account on X was compromised and it had not approved any Bitcoin ETFs. So, on the back of this, Bitcoin initially jumped as high as 47,901, its highest level since March of 2022, before dropping to as low as 44,800, all in the move of one day, as overall. And well, when it came to close, then Bitcoin managed to recover slightly, closed around that 45,680 mark. So that's where it is at as we speak. So, well, yesterday big gains for cryptocurrency, today big drops also coming in for cryptocurrency. But well, Shreyansi, this is what the global handover as well as what's happening in the crypto world is looking like. Take us through what's happening with oil.
Absolutely. So, big moves there as well. When you look at oil prices, they rose about 2% after sliding in the previous session as markets weighed Middle East tensions against demand worries as well as rising OPEC supply. So, when you look at Brent Crude futures, you're looking at a gain of about 1.9%, and the prices settle around the $77 a barrel mark. While when you look at US WTI as well, you're looking at gains of about 2%. Prices also settled around that $72 a barrel mark. Now, geopolitical tensions in the Middle East and an ongoing supply outage in Libya offered support to prices, but some major shipping firms are still avoiding the Red Sea. In fact, Germany's Hapag-Lloyd is saying that they'll continue to divert vessels around the Cape of Good Hope in the wake of attacks by Houthi militants. Now, the oil benchmarks are rebounding from 3% and 4% losses that they incurred on Monday respectively. So these are sharp moves coming in. And this was of course followed by cuts by top exporter Saudi Arabia to its official selling prices. So that is something that we saw play out in the oil market earlier this week. Now, the market is awaiting US inventory data from the American Petroleum Institute and also core inflation data. So those are the two data sets that are highly awaited. And even the yellow metal is awaiting that particular data set as well when you look at core inflation data. Spot coal rose less than 0.1% to around 2029 per ounce, and this was after hitting its lowest level in over 3 weeks on Monday. But it'll be key to watch that particular data set, Snehi.
Absolutely, so all eyes will be on that. And now that you've mentioned about oil, let's also take a look at all the important events that you need to be tracking for today. And well, today you've got the US crude oil inventories data set coming in from the United States, so keep your eye out on that. Moving on to corporate action, shifting focus back home, then keep your eye on the counter of Cochin shipyard, because the company is going to go ahead and split the face value of its stock from 10 rupees to 5 rupees per share, which is in the ratio of 2:1. Now, another counter that will be in focus today is Grasim, because the stock will start trading ex rights today. The company has gone ahead and announced the rights issue, so today is the record date for that as well. When it comes to other events, then starting today till the 12th of this month, you've got the Vibrant Gujarat Summit kicking off in Gandhinagar in Gujarat, so keep your eye out on that. Lots of deals are expected to take place over there. And Bank of England Governor Andrew Bailey will also be speaking, so watch out for that commentary. And the India-UK FTA dialogue will be reaching its final stages today, so it will be key to watch. So Shreyansi, lots of cues to watch out for in trade today.
Absolutely. And let's also see what's happened kickstarting the day with global macros. Then the US trade deficit has unexpectedly narrowed in November, reflecting an increase in exports of cars and services. Despite the November decline, merchandise imports remain elevated against a backdrop of resilient consumer spending.
Well, moving on then, let's talk about the World Bank, because the World Bank has released its GDP growth estimates and it has retained India's FY24 GDP growth view at 6.3% and estimated 6.4% growth for FY25. And the 2024 global GDP growth is also pegged at 2.4%, the same as June last year. And meanwhile, the institution lowers 2025 global GDP growth estimates to 2.7% from the year gone by.
An asset manager major, BlackRock, has announced that it will lay off 3% of its workforce, which amounts to roughly 600 employees. According to reports, no single team will be the focus of the cuts. Shares of the company are up about 5% over the last 12 months, well behind the roughly 22% gain in the benchmark S&P 500.
Moving on then, Hewlett-Packard has agreed to buy networking gear vendor Juniper Networks in an all-cash deal worth $14 billion. The company expects to close the deal later this year or in early 2025. Meanwhile, Juniper shares had their best day in 20 years, soaring about 22% yesterday.
And Boeing chief David Calhoun makes first public remarks since the mid-air accident, acknowledging the company's mistake. Also said that the company's staff is cooperating with regulators so as to never repeat the mistakes.
Well, let's shift focus and talk about what's happening with Boeing, the latest that we're getting for you, because after the tech snag report with the DGCA, Boeing has now recommended for a one-time inspection of all 737 MAX aircraft. This is meant to be completed before the 10th of January, which is today. But remember, the aircraft maker has faced heat in the US too over the last few days. My colleague Samir Dikshit has more on this. Samir, over to you.
The aircraft manufacturer Boeing has recommended a one-time inspection of all of the Boeing 737 MAX aircraft. Now, this recommendation is in the backdrop of any possible loose hardware. In the recent development, one of the airline operator has informed the Indian aviation regulator DGCA that there was a nut washer missing in one of the aircraft, and post this information after the directions from the Boeing or the assistance from the Boeing, the rectification was done and the aircraft was released for further operation. But after this particular case where the airline operator informed about the nut washer missing, now the Boeing has recommended that all the 40 of these 737 MAX aircraft, it should go for a one-time inspection. In India, there are 40 Boeing 737 MAX aircraft being operated by various airlines. Out of these 40, 22 are with Akasa Air, 9 aircraft is with SpiceJet, and 9 is with Air India Express. So in totality, there are 40 Boeing 737 MAX aircraft, and now it has been once again recommended to go for a one-time inspection. Earlier, we have seen that because of the Alaska Air incident, as a precautionary move, DGCA directed all of the airline operator to have a safety audit of their particular Boeing fleet aircraft. Major of which it was done, and it was apprised to the regulator that everything was okay, no such lapses were informed. And out of this 40, 39 were properly, it was inspected. But in one of the aircraft, there was a nut washer missing in the aircraft particular rudder quadrant, and now it has been rectified. So this recommendation has been given by Boeing, and it has also been suggested that this inspection, the one-time inspection, has to be done till 10th of January 2024.
Thanks, Samir. On to an 18-hour exclusive then. Despite rising construction costs and a stagnant inventory during COVID, the real estate outlook remains optimistic with strong demand, especially in Tier 2 and Tier 3 cities, benefiting from infrastructure projects like the Kashi Vishwanath corridor. And that's the word coming in from Sushil Mohta, who's the chairman of Merlin Group. Listen in to a slice of that conversation.
The trend will continue. The demand is there, and the demand is from the actual users. You must appreciate that, you see, there is a huge urbanization happening across the globe, and India is not far behind. House.
So I understand what you say, but does that really translate into further appreciation of prices in 2024?
Well, I think that, there won't be much appreciation this year, but the demand will continue. See, as a developer, we are looking for the demand to continue, the sales to continue. We are not a speculator. We would like homes to remain affordable so that the public can buy and they can make their home.
Right, but what do you foresee for the Tier 2 and 3 towns and cities?
Tier 1 cities have already grown. Now those Tier 1 cities are,
In terms of real estate?
in terms of real estate, in terms of infrastructure. So they are now enlarging. They are now, a lot of suburban areas or nearby areas are merging into those Tier 1 cities. So they are becoming bigger and bigger. But 80% of our urban population is living in Tier 2, Tier 3 or Tier 4 cities in our country. And our developer community, 80% of our developers are also coming from Tier 2, Tier 3 city. Now these Tier 2, Tier 3 city economies are also getting robust, and
Well, an interesting chat that one over there. But let's move on and talk about Varanasi, because Varanasi's tourism has skyrocketed, marking a 7-fold increase. Massive investments in the infrastructure space reveal a promising future and position the temple city as a development hub. Well, that's the word coming in from Pulkit Garg, the vice chairman of Varanasi Development Authority. Let's listen in to a slice of that conversation.
So I think in the past couple of years, we are seeing a record number of tourists coming here to Banaras. That number has increased from 60 lakhs maybe 2-3 years back to now 6 CR to 7 CR annually. So that's like a 10-fold jump. Plus Banaras is coming out to be a regional hub of development. So also based on these statistics, Banaras really has a huge potential for hotels and for Airbnbs, for paying guest houses. So we are currently seeing a demand, very high demand, and we are seeing a shortage of 2,000 to 3,000 rooms at least per day. So primarily, and in the housing sector, we are expecting a demand of at least 2 lakh units in the coming 10 years. So to fulfill this demand, Varanasi Development Authority is taking some active steps. So we are currently going in for 4 major townships near the important areas, like near the airport region, near Ring Road, near Sarnath area. So we are investing around 17,000 crore rupees. So which we can see the result in a couple of years. Plus we are luring the hospitality sector. We are making it easier for them to come here, to buy land, to get their maps approved. So all of these steps are being taken to promote growth in Varanasi.
Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. Let's shift focus and talk about some stock-specific news. And well, a counter to be watched for in trade today is going to be Polycab India, because that stock was down a solid 9 to 10% yesterday. And now the latest is that Polycab India has denied tax evasion rumors circulating in the media. The company emphasizes its dedication to compliance and transparency, having cooperated fully with the Income Tax Department officials during the December search proceedings. My colleague Bhavya Dua is joining in with the latest on this, tax row. Bhavya, take it away.
Right, the shares of Polycab India plunged following reports claiming a 200 crore tax evasion. Now, the stock slumped 9.26% to hit a day low of rupees 4,850. And on BSE, around 2.44 lakh shares were changing hands today. Now, reports suggest that Income Tax Department detected around 250 to 300 crore of transactions booked in the company's promoters' accounts. Now, in addition to this search, IT department claimed to have collected proof of tax evasion from the company's account in the last 5 to 6 years. The Income Tax Department had conducted raids across 50 locations of Polycab in the last month, is what the report suggests. But Polycab India denies any such rumors of tax evasion by the company circulating in the media. In their comment, Polycab India says that the company asserts its commitment to compliance and transparency, having fully incorporated with the Income Tax Department officials during the search proceedings in December of 23. The company has not received any communication from the Income Tax Department regarding the outcome of that particular search. Polycab India remains focused on its mission to provide quality products and services to its customers while upholding the principle of corporate governance and ethical business practices. Now, Polycab India has 23 manufacturing facilities, 15 offices, and more than 25 warehouses across the country. The company manufactures cables and wires along with fast-moving electronic goods. In the quarter ended in September of 2023, Polycab reported a 58.5% growth in consolidated net profit to rupees 436.89 crores. In the last month, share of Polycab India has tanked 12%, with net 6% only after the December 2022 rates. While the Income Tax Department is yet to reply to any of the queries raised by it now on this matter.
Well, thanks, Bhavya. We'll keep an eye on the stock today in trade. But moving away from that then, interim budget on February 1st may give some relief to income taxpayers. ET now has learned from sources that Finance Ministry is discussing various proposals to maintain a balance between reliefs and revenue. Let's go across to my colleague Prakash Priyadarshi, who has more details. Prakash?
Yes, as we have reported earlier, that the government is likely to propose some relief to the taxpayers in the interim budget. We are given to understand that the government may provide further relaxation under new tax regime to make it more attractive. However, the next budget is going to be an interim budget, but the government will show its intent to provide further relaxation to the taxpayers going forward. Sources are informing the income tax exemption limit could be increased to rupees 3.5 to 4 lakh. In addition to that, the overall tax rebate may be enhanced to rupees 3.5 lakh. An important development coming in. Along with that, we are also given to understand that the government may take further steps to simplify overall process and the new tax regime to make it more attractive. Sources are informing that the active discussion is going on in the Finance Ministry, but the final decision would be taken closer to the budget.
All right, Prakash, thanks for all of those details. But while you're with us, let's also talk about capital expenditure, because the government will not go slow on capex in the interim budget. And at least this is what we've learned from sources, that the government will announce a 10 to 15% proportionate hike before the final budget is announced in June by the new government. So, Prakash, what are you picking up on this, and what's happening when it comes to capital expenditure?
Yes, we are learning from our sources that the government is likely to make better balance between fiscal prudence and capital expenditure target in the interim budget. Sources are informing that despite being an election year, government will go ahead with the realistic capital expenditure target, and proportionate announcement could be made in the interim budget. Sources are informing that capital expenditure target is likely to see 10 to 15% increase as compared to last year, and some key infrastructure sectors like railways, housing and NHI will see higher allocation. Allocation for these sectors may be increased by 10 to 25%. We are also given to understand that despite being an election year, government will stick to its fiscal management target, and there will be better balance between revenue collection and expenditure. Sources are also informing that the tax and non-tax collection will be taken into account before making any such announcement, and the government will try to achieve 5.9% fiscal deficit target for the financial year 2024 and 4.5% fiscal deficit target till 2026.
Well, thanks, Prakash, for those details. Another space that has been in the spotlight is the textile space. So this is as the union government has set $100 billion export target by 2030. In fact, it is learned that FTAs with countries like Australia, UK, Canada, among others, is also all set to open new opportunities for textile exports. In fact, my colleague Sameer Dixit is standing by with more details. Sameer, that's quite the target. And what else is being penciled in terms of growth targets?
A number of initiatives have been taken by the government to strengthen the entire textile, ecosystem, which will help in, improving our manufacturing capabilities and make us more and more competitive in the global market. So one of them is, of course, the PLI scheme, where we are hoping that, with the scale and size that our manufacturing, that our participating companies would be able to achieve, it will lead to economies of scale and, bring down their cost and make them more competitive. We are also focusing in the PLI schemes on the sunrise sectors of MMF apparel, MMF fabric, and technical textiles, which have a lot of potential in the global market.
You have set an ambitious target of $100 billion export by 2030. That's quite a big task. FTAs alone, how much it's gonna support it? And in addition to this, would you also like to explore some new market if any name it is there in the pipeline? You want to share that?
Yes, we are looking at achieving an export target of 100 billion by 2030, and in fact within that we are also looking at achieving about 10 billion from technical textiles alone. We are presently at about 2 billion technical textiles. So yes, we do have an ambitious target, but we are working towards that through the initiatives which I've just mentioned. And in fact, in technical textiles, we also have a national technical textile mission, which is looking at enhancing our innovation and research capacity in technical textiles and developing more and more applications which will find a market, and also promoting exports. So our focus is sort of it's a multi-dimensional approach towards achieving this target, and we are hopeful that our industry is very dynamic, and the industry is fully sort of how should I say, even excited about coming together and all these stakeholders working together to achieve this sort of a vision that we have for the textile sector.
Well, all right, that's the word coming in from the Textile Secretary, but let's shift focus from textiles and talk about real estate, because the real estate segment has been making all the buzz on the street lately. And as we move closer to the interim budget this year, we caught up with a few real estate players to understand what's on their budget wish list. Listen into what they had to say.
Plenty. Everything that we want is for the consumer. But one of the key points that most of our developer fraternity keeps speaking as a pain point is the definition of affordable housing. We've defined affordable housing with a 60 and 90 square meter criteria, but with a 45 lakh rupee price tag. Now, if you just look at this 45 lakh rupee price tag, which was put about 5 years back, and you just kind of add inflation to it, we're talking about 70 lakhs already. We really need to define affordable housing as only and only against the size of the apartment. That would allow people and to be able to get a better life and a lifestyle. The other things could be interest cost waiver against the purchase of an apartment. Capital gains being treated like they were for a shot in the arm for the real estate industry.
We planned a affordable housing segment project with about 6,000 homes, and it was all under the PMA guideline and affordable housing. But unfortunately, for their own reasons, the government rolled back on the GST input tax credit. I think that has proved an expensive jolt for the industry as a whole, for real estate. And we've been giving our representations that we should be allowed to revert back to the earlier GST fundamental thing, that it is, input tax credit has to be allowed, which ultimately is beneficiary to the customer.
If we talk about the housing loan, interest on housing loan, so in income tax they are giving 1.5 lakh. So we are telling them whatever the housing में जो आप interest पे you are paying the interest, it should be deducted from the income. So entire interest income should be deducted from the income. Second thing is GST. In GST definition, they have kept 45 lakh rupees cap, but as we talk about that bottom of pyramid is going up. So we are asking that please keep it as the area only 60 meter in metro city and 90 meter in non-metro city. Remove that 45 lakh rupees cap. That is the second thing. Third thing, we are asking government to give some incentive, the CLSS, credit link subsidy scheme. It was there before 2 years. Government has stopped last year. So we have requested government to restart it.
In the fast-paced world
for 10th consecutive session now. So this level could be seen as a good support and resistance. But if we give a breakout on downside from this consolidation pattern, then 21,350 could be another level to watch out for on downside. Checking FNO segment, in futures we are seeing open interest dropping by around 0.4%. So mild short covering is seen here. Whereas on option front, we are seeing active call writing at 21,650. So if we are moving towards 21,800, then this is the level where we can face some hurdle. Whereas on downside, we are seeing active put writing at 21,400. So traders are not very confident on Nifty holding on to 21,500. That's why they are building support position at around 21,400 level. Let's have a view on Nifty Bank as well. Nifty Bank, if you'll see the chart, Nifty Bank faced strong resistance at 20 DMA actually. Also, it seems to have actually given a breakdown from its upward sloping support trend line. However, the index continues to trade within its wide range of 46,700 to 48,200, which could be seen as a good support and resistance for today's session as well. And today we have a weekly option expiry, so expect some more volatility in the market. On option front, we are seeing call writing at 47,300 strike, which is actually very close to the previous close. So if we see opening above this, we may see some bears getting trapped, which may support the market to give a move on upside. Whereas active put writing is seen at 46,600. On charts, we were seeing support around 46,700. So this 46,600, 46,700 could act as a cushion to the falling prices. So this is the levels which one should watch out for.
Well, thanks so much, Ansh, for taking us through that. Keep those levels in mind for today's trading session. But moving on then, I'm being joined by my colleague Gaurav, who's here to talk about the top brokerage picks for the day. And Gaurav, good morning. I believe IT and engineering companies are on the radar. So take us through that.
Yes, right, you said there are engineering research and development companies which are buzzing today, and this is because HSBC has now upgraded the rating and as well as the target price for such companies. So they believe that ER&D companies shrugged off the headwinds and grew at a brisk pace in 2023, and this is despite we saw that the IT services names were struggling in 2023, but from here on they believe that R&D spendings are going to slow down. But if we talk about specific companies which are in a right pocket of this space, they believe that they can grow even further from these levels, and that is why they have named a few companies like Cyient, where they have maintained buy rating and hiked the target price to 2,570 rupees. For L&T, they have hiked the target price to 4,905 rupees. For Persistent, they have hiked the target price to 6,950 rupees. While for KPI Technology, they have hiked the target price to 1,930 rupees. Let's also talk about Nuvama, what they have to say on IT sector. So they believe that the downgrade cycle is likely to end in Q3 FY24, which is the current quarter. And they also believe that from here on, fundamentals are going to support the companies, and they also going to have strong order book and segmental revival. From here on, they also believe that we may see some kind of decline in the interest rates, and this is going to push the spendings in the IT sector. And again, they have increased the target price for almost all the companies, and a few to name are like Infosys, where they have also upgraded the rating to buy and the target price to 1,800 rupees. For First Source, they have upgraded the rating to buy and the target price is also hiked to 230 rupees. There are some companies where they have maintained buy rating like L&T, LTI Mindtree, Coforge, Persistent, where they have hiked the target price to 7,350 rupees. For Coforge, they have hiked the target price to 7,300 rupees, and for Persistent, they have hiked the target price to 8,600 rupees. There are also a few companies where they have downgraded the rating, like Tech Mahindra, where they have maintained reduced rating but still hiked the target price to 1050 rupees, while for Emphasis maintaining the reduced rating, they have hiked the target price to 2250 rupees. And lastly, a few names where they have maintained hold rating but still hiked the target price are Cyient, where they have hold the maintained rating, hold rating and hiked the target price to 2200 rupees, and eClerx, where they maintain hold rating but we saw a big upgrade in the target price to 2750 rupees. So it is clearly very evident to see that IT names are going to buzz, and let's keep an eye on all these stocks as well.
We'll definitely be keeping an eye on all of those counters on account of the brokerage note. But which are the stocks that we should keep in focus on account of news flow?
Right, so Lupin will be the first stock in focus for today's trading session, as company has launched bromphenic ophthalmic solution in the US, which is used for after cataract surgery with exclusive first to file status. Apart from this, MedPlus will also be in focus as company faces regulatory actions with drug license suspension for specific premises. Steel Strip will complete the acquisition of AACL, infusing around 138 crore and securing 100% equity interest. Oga Sugar will also be in focus as company leases its factory to SGZ and SGA Sugar Limited until the end of 2024 crushing season. Lastly, KIOCL will be in focus as company temporarily suspends operations at its pellet plant unit in Mangalore due to iron ore fines non-availability. So keep an eye on the stocks.
Well, Ansh, thanks for taking us through that list. We will be keeping an eye out on that. But another sector or another space that we need to be keeping on the radar today is the shrimp stocks, because we're getting some interesting insights from there. Ecuador, which is the top shrimp exporter, continues to reel under political instability. Let's understand why this is happening from my colleague Sharat. Sharat, take it away.
Shrimp stocks will be in focus in the day's trade at important development coming in Ecuador. Now the reports are suggesting that a state of emergency has been declared. Now of course political instability is there, and the opposition parties or the cartels, you could say, are opposing the increase in the shrimp industry. Now do remember, Ecuador is the largest exporter of shrimps, and this is followed by India. Overall, of course, the size of exports from Ecuador market, that's on the higher side, but do remember that there's a gain coming in for the Indian shrimp exporters, as well as the channel checks suggest that the inquiries might increase when it comes to the shrimp exporters from the Indian counterpart. Apart from this, there is a variant of El Nino which is expected to impact those areas as well, and that becomes a cause of concern. So it becomes Ecuador's pain, but it actually becomes India's gain as well. Now if you look at the Indian shrimp exporters, third quarter and fourth quarter is generally a very strong quarter when it comes to the exports. And do remember, there has been a lukewarm returns coming in the stocks in the year 2023 itself. If you look at Avanti Feeds or even Apex Froze, there has been, you could say, a range-bound returns. It's somewhere in the negative -6% to +13%. So you can imagine that the lukewarm returns and a strong geopolitical play might augur well for the Indian shrimp exporters.
Thank you so much, Sharat, for that update. We'll keep an eye on all of those counters, but let's take a look at some more news and updates coming in. A day after Elizabeth Borne resigned as France's Prime Minister, President Emmanuel Macron named Gabriel Attal as the country's new Prime Minister. The current Education Minister will become the youngest person to occupy France's second highest office at the age of just 34 years. And North India shivers amid continuing cold wave conditions. From national capital Delhi to Jammu and Kashmir, fog engulfs skies. Parts of Himachal receive fresh snowfall, 18 Delhi-bound trains running late. And the year 2023 has been confirmed as the warmest on record. According to the EU Climate Service, last year was about 1.48 degrees Celsius warmer than the long-term average. These global records are bringing the world closer to reaching key international climate targets.
Well, let's shift focus to politics and talk about politics globally, because former US President Donald Trump has threatened to prosecute his successor Joe Biden if he returns to the White House. This comes as the appeals court is probing the limits of Trump's broad immunity claim in 2020 election case, as his lawyers argued to judges that he was immune from prosecution. And shifting focus to politics back home, then Maharashtra Speaker to announce the verdict on the disqualification of Shiv Sena MLAs today. The Shinde camp holds late evening huddle ahead of the verdict, and Deputy Chief Ministers Devendra Fadnavis and Ajit Pawar have attended that meet yesterday. Well, with that, I'm afraid we're completely timed out on this edition of Market Cafe. From me, Snehi Shah, my co-anchor Shreyansi Singh and the team that put this show together. Thanks so much for watching, but stay tuned to the channel because the market takes all the action ahead.